Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look at the gold market. So as usual, we have prepared the weekly report. We think it rather interesting is because we have taken a look at some reasons why gold has shown this sharp reversal on Friday and Thursday. So as I said in a recent video on Friday, it was unclear actually the reasons why this has happened. Well, currently it seems that it might be some strikes of the employers on automakers in the United States. But we also see that might be the different problem, and it mostly has the fundamental background. We have discussed this in the weekly report. In 2 words speaking, this is this balance between the gold market in China on exchange and price premium to the COMEX quotes, and it might be some crack in hedgers and arbitrage traders activity when it is difficult to hide the rising demand for the physical gold in China exchange by manipulating with the derivatives on the COMEX and using some paper gold positions to hold gold price low. It still needs to be checked and confirmed, but if this is really so, it could tell that maybe long-term gold rally could start a bit earlier than we thought. As you know, we're speaking about the October, November and end of this year, but it might start earlier because, as you know, our long-term position is bullish and we call for buying of the physical gold for the couple of years already. While in the short term, we talked about some tactical pressure on the gold because of the policy of the Fed, overall situation with the rates and so on. But this might be the indicator that the situation has started to change. This is just the suggestion, but it might be. Anyway, whatever it has happened, it has broken totally the short-term context, because here we have the clear example of the bearish trap when we have the broken down flag, bearish consolidation, and prices return right back up. Returning back in this consolidation. It means that we should get opposite breakout and further upward action. Currently, we suggest just maybe some returning back to the resistance because it's rather strong resistance, 1950 area. But potentially, I'm not excluding it's possible even some kind of the A, B, C, D pattern right here. For our first task in next week, it will be considering taking the position with this stuff. In the current environment, we of course do not consider any short positions. So this is first point. On the 4-hour time frame chart, you clearly could see why I treat this price action as external intruding and why it is not naturally for the general any market performance. Here is 2 reasons. First of all, it's because if you read our analysis and have watched our weekly analysis, weekly charts, you probably should remember that this action to the downside has slightly broken the confidence support on a weekly chart. And technically, it means that market could fluctuate in a new trading range, right down to these lows. It will not feel the pressure of the existed confidence support just because it already has been widening by this slightly lower downward action, and that has led us to suggest that we could get some kind of the ABCD pattern. If you remember, our target was somewhere around 1885. That's the first reasons, with this reversal, market hasn't quite reached the COP on a lower time on a weekly chart, and with this downward action, market even has not reached this level and turns up without any technical reasons. Second reason why I think that is not quite natural, you could see with the targeting on the fall time frame chart. Take a look what we have. This is our, by the way, ABCD, and we have suggested the market should drop right there. Sorry, not 1885, 1893. That's OP we were considering, if you remember. But take a look what has happened. Market already has broken as a fib level, as the COP target, and suddenly somewhere in the free space has stopped. Take a look sometimes of some kind of the twizzled bottom performance, showing sharp reversal and start upward action. This is absolutely, well, not normal from the technical point of view. And it means that on the background of this action stands something bigger than just technical analysis. So this reversal has no relation to the technical picture and of the pricing and performance of the coal market per se, but it's definitely impact of some external factor. It's just explained, confirmed by the overall price action. So what we have currently, we have divergence in place. And the only solution that we have currently is actually obvious. You probably know it by yourself. So let's take a look at the hourly chart. We will have to deal with the hand and shoulders, as usual, with all the routine work that we do usually around it. So first of all, we're watching for the right arm. Supposedly it should be somewhere around 1910, 1950. I thought that 618 level will be too low, because comparing to left arm, it should be somewhere around this 50% support. So that's what we'll be watching. Besides, here you could see classical performance with the hand and shoulders. Slow down on the downward action and accelerating of the upward action, where the bulls start taking control over the market. So I think that it makes no sense to consider some deeper fib levels rather than 1915. So our first step is to consider taking the long position. We're not watching for any shorts by far, and we'll take a look what will happen around this level. And as usual, we also will be watching for confirmation of hand shoulders and its possible failure. If market will fail, here start dropping lower, you know what to do. It means that failure of the hand shoulders, that this was the short-term factor, which actually has real big doubts on this. Well, maybe this of the production strike or something. And market will start failing, returning back to the normal performance of the bearish trend. But something tells me that this is not the case. So it's in the current environment, it seems that we should get some ABCD and some upward continuation. That will be our primary scenario. As usual, scalp traders, although we're not considering this in our regular reports because of the too small scale, you could consider additional trading setups. For example, you have here a nice thrust, so it might be the Brent bottom with a minor pullback here. Then you could consider some short-term kind of the ABCD or something. Downside target on the road to right shoulder bottom, something of this kind. But for us, since we're trading on the 4-time frame chart, on the daily chart, for us the major background right now is bullish, and we're considering only the long position by far. So that's what we have on the gold. Situation really develops very fast, and in the politics and in the economy. So lots of events, and volatility probably will rise on the gold market in nearest time, and should be really interesting. So let's see how it will turn on Monday.